Hey, what's up everybody? It's Nexus Investor and welcome back to the channel. Today, we're diving deep into the UK property market to uncover the best locations for buy-to-let investments in 2024. Listen, the UK property market is always a hot topic and for good reason. It's historically been a very stable investment and it can be a great way to build long-term wealth. But, like with any investment, it's crucial to do your research and make sure you're putting your money in the right place. That's why we're here to break down 7 of the top cities in the UK that we think are poised for strong rental yields and capital appreciation in the coming years. We'll look at factors like rental demand, economic growth, infrastructure projects, and more. We're talking hard data, guys, to help you make informed investment decisions. First up on our list is a city that's been making waves in the property market, Liverpool. Now, Liverpool has always been known for its rich history, vibrant culture, and of course, its football. But in recent years, it's also become a hotspot for property investors, and for a good reason. One of the biggest draws for landlords in Liverpool is the incredible rental demand. The city is home to a massive student population of over 70,000. I mean, we're talking 3 major universities. That means a constant stream of potential tenants looking for accommodation, and it's not just students. Liverpool's job market is booming, attracting young professionals from all over the UK, further fueling the demand for rental properties. And here's the thing, this demand is translating into serious cash flow for landlords. We're talking about some of the highest rental yields in the UK. On average, investors in Liverpool can expect to earn a healthy 6 to 7% rental yield, and in some areas even higher. Now let's talk capital appreciation. Liverpool has seen some impressive property price growth over the past few years. I mean, check this out. Back in 2011, the average property price in Liverpool was around £108,000. Fast forward to 2021, that number jumped to £166,000. That's a pretty significant increase, and it's a clear sign that the market here is on an upward trajectory. But it's not just about past performance, right? What about the future? Well, experts are predicting that Liverpool's property prices will continue to rise in the coming years, with some estimates suggesting a potential growth of 15.9% over the next 4 years. That kind of potential is hard to ignore, guys, but here's the thing that really excites me about Liverpool. It's undergoing a massive regeneration. We're talking billions of pounds being poured into infrastructure projects, waterfront developments, and cultural initiatives. This is transforming the city, making it even more attractive to live in, work in, and invest in. Next up, we're heading east to another northern powerhouse, Manchester. Now, Manchester has established itself as a major player in the UK, not just in terms of its economy, but also in its property market. Manchester is a city that's absolutely buzzing with energy. It's got a thriving economy, world-class universities, a vibrant cultural scene, you name it, Manchester's got it. And this is reflected in its property market, which has been on fire in recent years. One of the biggest drivers of Manchester's property boom is its student population. With over 100,000 students spread across its universities, Manchester has one of the largest student populations in the UK. And these students need places to live, right? This creates a constant demand for rental properties, especially in areas close to the universities. But it's not just about students. Manchester is also a magnet for young professionals. The city is home to a thriving tech scene, a growing financial sector, and a whole host of other industries that are attracting ambitious young people from all over the UK and beyond. This influx of young professionals further fuels the demand for rental properties, and it's one of the reasons why Manchester consistently ranks among the top cities in the UK for rental yields. Now let's talk capital appreciation. Manchester has witnessed remarkable property price growth in recent years. Back in 2011, the average property price in Manchester was around £123,000, but by 2021, that figure had surged to £210,000. That's an incredible increase, and it shows the strength and resilience of the Manchester property market. But what really sets Manchester apart is its projected rental growth. Experts are predicting that Manchester will experience the most impressive rental growth in the entire country from 2023 to 2027. I mean, can you imagine the kind of cash flow you could generate with that kind of rental growth? That's the power of investing in a market that's experiencing strong fundamentals. Moving on to another gem in the north of England, we have Leeds. Now, Leeds often gets overlooked when people talk about UK property hotspots, but it's a city that's quietly been building a reputation as a fantastic place to invest in property. One of the things that makes Leeds so attractive to investors is its affordability. While property prices have been rising steadily in Leeds, they're still relatively affordable compared to cities like London or even Manchester. This means you can get more bang for your buck in Leeds, which is always a good thing when you're looking for a solid return on your investment. But don't let the affordability fool you. Leeds is a city on the rise. It boasts a strong economy, a growing population and a vibrant cultural scene. Plus, it's home to a large student population exceeding 65,000, thanks to its renowned universities. Over the past 2 decades, Leeds has witnessed remarkable population growth, outpacing London by a factor of 7. This surge in population has resulted in a significant demand for housing, especially rental properties. Leeds is also experiencing a boom in employment opportunities. With a 34% increase in employment, the demand for housing continues to soar. This supply-demand imbalance creates a favorable environment for landlords, ensuring a steady stream of potential tenants. And let's talk about capital appreciation. Leeds has seen impressive property price growth in recent years. In 2011, the average property price in Leeds was around £140,000. By 2021, that figure had climbed to £211,000. That's a substantial jump, indicating a healthy and appreciating property market. And experts are predicting even further growth in the coming years. Property prices in Leeds are expected to surge by an impressive 14.2% by 2027. This projected growth makes Leeds an incredibly attractive option for investors seeking long-term capital gains. But here's another interesting statistic. 73% of households in Leeds are renters. That's right, almost 3/4 of the people living in Leeds are renting their homes. That tells you everything you need to know about the strength of the rental market here. Chapter 4, Birmingham, the heart of the UK property market. Next up, we're heading to the heart of England, Birmingham. Now, Birmingham is often referred to as the UK's second city, and for good reason. It's a major economic hub with a young and diverse population, making it a very attractive location for property investors. Birmingham has a lot going for it. It's got a thriving business scene, excellent transport links, and it's undergoing a massive regeneration. Plus, it's significantly more affordable than London, which is a big draw for both residents and investors. One of the key factors driving Birmingham's property market is its strong professional appeal. The city is home to the UK's largest professional hub outside of London, with over 100,000 workers in various sectors, including finance, technology, and healthcare. These professionals need places to live, and they're willing to pay good money for quality accommodation. But it's not just professionals flocking to Birmingham. The city is also a major student hub, with 5 universities and a student population of over 80,000. That's a lot of potential tenants looking for rental properties. This strong tenant demand has resulted in impressive rental yields for landlords in Birmingham. On average, investors can expect to earn around 5 to 6% rental yield, which is very respectable, especially when you consider the potential for capital appreciation. Speaking of capital appreciation, Birmingham has seen some solid property price growth in recent years. Back in 2011, the average property price in Birmingham was around £132,000. By 2021, that figure had risen to £209,000. That's a healthy increase, and it shows that the Birmingham property market is on an upward trajectory. But here's what really excites me about Birmingham, its future prospects. The city is undergoing a massive transformation, with billions of pounds being invested in infrastructure projects, including the HS2 high-speed rail line, which will connect Birmingham to London in just 49 minutes. This improved connectivity is expected to have a huge impact on the Birmingham property market, attracting even more businesses, residents, and investors to the city. Let's move on to another city that offers a compelling combination of affordability and high rental yields: Sheffield. Now, Sheffield might not be as glamorous as some of the other cities on our list, but it's a solid choice for investors who are looking for value for money. Property prices in Sheffield are significantly lower than in many other UK cities, which means you can get a lot more for your investment. But don't let the affordability fool you. Sheffield is a city that's been quietly reinventing itself in recent years. It's got a thriving cultural scene, two major universities, and it's surrounded by beautiful countryside. One of the biggest draws for landlords in Sheffield is the high rental yields. Thanks to the city's relatively low property prices and strong rental demand, investors in Sheffield can achieve some of the highest rental yields in the UK. We're talking yields of 7% or even higher in some areas. Sheffield is home to two large universities, which means there's a large student population constantly looking for accommodation. In fact, Sheffield has a student population of 63,000. This creates a consistent demand for rental properties, especially in areas close to the universities. But it's not just students driving the rental market in Sheffield. The city also has a growing economy with major employers in sectors like advanced manufacturing, healthcare, and technology. This is attracting young professionals to the city, further boosting the demand for rental properties. And let's not forget about capital appreciation. While Sheffield's property prices are currently lower than in many other UK cities, they've been steadily rising in recent years. In 2011, the average property price in Sheffield was around £126,000. By 2021, that figure had climbed to £186,000, and experts are predicting continued growth in the Sheffield property market. The city is undergoing significant regeneration, with major projects like the heart of the city transforming the urban landscape. This is making Sheffield an even more attractive place to live, work, and invest in. Next, we're heading to the legendary city of Nottingham, a city steeped in history and brimming with investment potential. Nottingham often flies under the radar when it comes to UK property investment, but it shouldn't be overlooked. The city offers a unique blend of affordability, strong rental yields, and promising capital growth prospects. One of the things that makes Nottingham so appealing to investors is its strong rental market. The city has a large student population thanks to its two universities, and it also has a thriving economy with a diverse range of industries. Nottingham boasts a highly employable population, with around 70% of its residents being of working age and employed by local businesses. This strong employment rate contributes to a stable and reliable tenant pool, making Nottingham an attractive proposition for buy-to-let investors. In terms of rental yields, Nottingham is a star performer. The city consistently ranks among the top cities in the UK for rental yields, with some areas offering yields of over 8%. That's right, over 8%. That's the kind of return that can make a real difference to your investment portfolio. Now let's talk capital appreciation. Nottingham's property prices have been steadily rising in recent years, and experts are predicting continued growth in the coming years. In 2011, the average property price in Nottingham was around £103,000. By 2021, that figure had jumped to £172,000. Several factors are driving this growth, including significant regeneration projects like Broadmarsh and the Island Quarter. These projects are transforming the city centre, attracting new businesses, residents and investors. Nottingham also benefits from having a large student population thanks to its two universities. This student population creates a constant demand for rental properties, especially in areas close to the universities. And let's not forget about the Robin Hood effect. Nottingham is a city with a rich history and a strong sense of identity. It's a city that people are proud to call home, and that's reflected in the strong demand for property in the city. Finally, we come to our last city on the list, but certainly not least, Newcastle upon Tyne. Located in the northeast of England, Newcastle is a vibrant city with a rich history, a thriving cultural scene, and a rapidly growing economy. Newcastle is quickly becoming a hub for young professionals, especially in the tech and digital sectors. The city is home to a market-leading startup incubator that's fostering new business development and attracting ambitious entrepreneurs from all over the UK. This influx of young professionals is creating a surge in demand for rental properties, especially in the city centre and surrounding areas. And with a substantial student population of over 50,000, Newcastle's rental market is showing no signs of slowing down. Now let's talk about yields. Newcastle offers some of the most attractive rental yields in the UK, with some postcodes like NE1 and NE8 delivering yields of over 7%. That's right, over 7%. That's the kind of return that can really make a difference to your investment portfolio. But it's not just about yields. Newcastle's property prices have also been steadily rising in recent years, and experts are predicting continued growth in the coming years. In 2011, the average property price in Newcastle was around £137,000. By 2021, that figure had climbed to £179,000. Several factors are driving this growth, including significant regeneration projects, a growing economy, and a shortage of housing supply. Newcastle is undergoing a major transformation, with billions of pounds being invested in infrastructure projects, new developments, and cultural initiatives. The city is also home to several large employers, including national brands that have established their headquarters in Newcastle, further boosting the local economy and attracting more residents to the city. Newcastle is also a cultural hub for the wider northeast region, with world-class museums, theatres, and art galleries. It's a city with a vibrant nightlife, excellent restaurants, and a strong sense of community. So there you have it, guys. 7 of the best UK cities for buy-to-let investments in 2024. From the vibrant streets of Liverpool to the historic heart of Nottingham, these cities offer a fantastic opportunity to tap into the UK property market and potentially build long-term wealth. Remember, guys, this is just a starting point. Before making any investment decisions, it's crucial to do your own thorough research. Consider your own financial situation and maybe even consult with a financial advisor. Property investment can be incredibly rewarding, but it's important to approach it with careful planning and a long-term perspective. Make sure you subscribe to stay up to date on all things real estate, and I'll catch you in the next video. Thank you for watching Nexus Investors Guide on the best locations in the UK for buy-to-let investments in 2024. Don't forget to like, subscribe, and hit the notification bell for more property investment tips and insights. For more detailed information, visit our blog and stay tuned for our next video.